I'm Andrew Jordan from NodeWise CPA. Welcome back to our series on SBA loans. Today, let's talk about what SBA loan process actually looks like, because it's very different from a conventional loan in some ways, and I don't want you going into it unprepared. It can be long, messy, and frustrating. If you run a managed service provider, this process can feel extra draining because you still have to keep supporting clients day to day while the bank asks for round after round of documents. SBA loans almost always take longer than traditional loans. If your bank has what's called preferred lender status, which you get by doing a certain volume of SBA loans, they can approve your loan on behalf of SBA. That does speed things up. If they don't, then your loan has to go through the bank approval and then a whole separate SBA approval. That means more steps, more questions, more time. In my own case, I work with one of the top 10 SBA producing banks. It's a national online bank, and I thought it'd be smooth. It wasn't. It was archaic, disorganized, and at one point there was a full month-long delay because they simply forgot to order the valuation on the business. I checked in multiple times. They told me it was underway, but no one had actually clicked the button to order the valuation. From first conversation to funding, it took 6 months. And that's me. I'm a CPA. I'm super organized. I'm very responsive. Very small SBA loans can close in 30 days, or so I've heard. $1 million SBA loan might close in 90 days if everything is lined up perfectly and you're on top of every request. But most take longer. And the longer it drags, the more complications, like rolling into a new tax year and needing updated returns or fresh financials. One thing that surprises a lot of people, SBA loans almost always require personal guarantee. And often that includes the bank taking a second position on your home mortgage. So if things go bad, you're personally on the hook. That doesn't mean it's a bad deal, but you need to go in with your eyes wide open. SBA loans are a lot of work. If you run an MSP, you need to know that going in. The bank will ask you for endless rounds of documents, it'll feel like. Sometimes the same thing more than once because they do make mistakes. If you let those requests sit, you can get bogged down in the process, and that can kill the deal or at least make it way more painful than it has to be. So here's my strong advice. Be extremely responsive. Treat those requests as top priority, even if they feel repetitive. And don't wait until they ask for something to go track it down. Gather your key documents in advance. Have those tax returns, financials, and statements ready so you're not waiting 3 weeks on your CPA to send you a copy of something you could have been ready to go in your folder from day one. For MSP owners, I recommend blocking a short daily window just for SBA requests so your client work doesn't get derailed and also the loan doesn't stall. I create a folder for clients going through this process when we're helping them with it, and sometimes it ends up with 100 documents in it before we're done. At a minimum, you can go and start gathering these. You'll need 3 years of business and personal tax returns and related entities, tax returns if you own multiple businesses, current business financial statements, personal financial statements, partner tax info, depending on ownership percentages. Every bank asks for a slightly different list, but the basics are always the same. And the better prepared you are, the smoother it goes. So here's the bottom line. SBA loans do take a little bit longer. They involve some more paperwork, and you'll be answering some more questions. But if you go in prepared, stay organized, and are extremely responsive, you'll save yourself a ton of frustration and give yourself the best shot of getting it done.